Welcome to the Deep Dive. Today, we're zeroing in on a real giant, JPMorgan Chase Co. We've spent a lot of time digging through, well, basically a decade's worth of their financials, market data history, and our mission really is to pull out the key insights from, say, 2014 right up to 2024.
Exactly. We want you to get a real handle on JPM's financial muscle, the market forces they deal with, and also the significant hurdles they face. It's not all smooth sailing.
No, definitely not. Get ready. We're going to unpack the story of a firm with, frankly, consistently huge revenues, incredible global scale, but also a pretty interesting track record when it comes to navigating some massive regulatory issues. So let's dive into this powerhouse. When you first look at JPM, the thing that hits you is just the sheer scale, right? It's the biggest U.S. bank by assets, largest market cap globally for banks. We're talking, what, $4 trillion in assets in 2024, fifth largest bank worldwide? But it's not just one big block, is it?
Not at all, no. That's key. Its strength comes from diversification. You've got consumer and community banking, the corporate and investment bank, commercial banking, asset and wealth management. And this label they have, systemically important. That's huge. It means intense regulatory focus, which forces them to maintain this fortress balance sheet, as they call it.
Right, that fortress idea.
We saw that tested, didn't we? With the First Republic Bank acquisition in 2024. That was JPM stepping in, really shoring things up during a shaky period. And yeah, the global reach is just immense, operating in over 160 countries.
Moving something like $10 trillion daily.
Daily, across, I think, 120 currencies, and safeguarding over $35 trillion in assets. Just staggering numbers.
Incredible scale. Okay, so beyond the size, what about the actual financial engine over this past decade? What did you find there? Any surprises in the revenue or profits?
The most surprising thing might just be the consistency of the growth. 7 years straight of record revenues. They hit $180.6 billion in 2024. Now, mind you, that year got a nice bump, about $7.9 billion, from some Visa shares gains.
Okay. Good context.
But even so, the underlying performance is strong. Look at the return on tangible common equity, ROTCE, a solid 20% in 2024. And they're consistently sending value back to shareholders, too. Regular dividend increases, like from $1.05 to $1.25 per share quarterly in 2024. Plus, they're always active buying back shares.
And that steady financial performance, you definitely see it reflected in the stock price. It's been on a major climb, right? From around, $47 back in 2014 to over $235 in 2024. Does that mean it's still a great buy, or is there, a catch?
Well, that's the million-dollar question, isn't it? Or maybe the trillion-dollar one here. The growth is impressive, no doubt, but the stock's currently trading near its historical peaks. Think all-time highs like $296 recently in July 2025. That suggests a lot of the good news, a lot of that quality is already, priced in.
Okay, priced for perfection, maybe? Yeah. So a powerful engine mostly running on North American fuel, it seems. How does that square with this massive global presence you mentioned?
Yeah, that's an interesting point you raised. JPM's history is global. Japan since 1924, China since 1921, major European hubs. But look at the revenue breakdown. North America consistently pulls in 78% of the total. It's dominant.
So the global network isn't primarily about revenue generation then?
Not the bulk of the revenue, no. It seems more strategic. It's crucial for diversification, for managing risk, navigating different regulatory environments, and of course, serving their global clients. It's a footprint as much as a revenue source.
Right. But that kind of size, that influence, it attracts a spotlight. And sometimes that spotlight finds problems. Costly ones. We hear about things like the London whale scandal. How impactful have these regulatory run-ins actually been?
Oh, hugely impactful. The London whale back in 2012, 2015, that wasn't just the $6 billion trading loss or the nearly $1 billion in fines. The really shocking part was finding out an assistant trader was literally keeping 2 sets of books to hide the mess.
Wow. 2 sets of books.
And the fallout, it wasn't just a slap on the wrist for JPM. That whole debacle was a direct catalyst for the Volcker rule, the one that banned banks from doing that kind of speculative proprietary trading. It changed the industry. And look, that's not an isolated incident. There's a pattern. Billions in penalties for toxic securities, mortgage issues, even $290 million just in 2023 related to Jeffrey Epstein and sexual exploitation.
So these massive fines, they're almost like a continuous cost of doing business at that scale.
You could almost see it that way. It represents a constant operational cost, a massive compliance challenge that just comes with being that big and complex.
Okay, so let's try and balance this out. Looking at JPM stock now, what are the pros and cons weighing everything we've discussed?
All right. Pros. Clear market leader, strong financials, that fortress balance sheet we talked about, reliable shareholder returns, very diversified business model, and that huge global reach. Those are serious strengths.
And the cons.
Well, the flip side, that history of major penalties means ongoing compliance risk and potential hits to reputation. They're very sensitive to the wider economy, obviously, intense competition, and it leads to this too big to fail paradox. Their importance brings stability, which investors like, hence the premium valuation. But that same importance means they're under a regulatory microscope constantly, which is expensive and burdensome. So their greatest strength, being indispensable, also creates this ongoing risk and operational drag. It's a real tightrope walk.
What a fascinating deep dive. JPMorgan Chase.
Yeah.
Clearly a dominant force. Unmatched scale, those record revenues, the resilience shown by the fortress balance sheet. You really can't deny they're a critical piece of the global financial puzzle. Indispensable, maybe.
Absolutely. But, as we saw, there's that persistent shadow, too. Those multi-billion-dollar penalties aren't just footnotes. They're a systemic cost, a challenge inherent in managing such a vast operation. Remember the London whale? It didn't just cost JPM money. It literally forced regulators to rewrite the rules, like with Volcker.
So maybe here's something for you, the listener, to think about. When an institution is labeled systemically important, how do we balance the stability in the global services they undeniably provide? Against the ongoing costs, the risks tied to that immense scale, and the potential for these regulatory issues to keep cropping up. What does JPM's journey really tell us about where global finance might be heading?